Yes, there's missing one mic. Sorry. That's why you're the last intern.
Didn't get the memo.
Cool. Well, get started. Thanks everyone for attending this session. My name is Alpha Chen. I'm the Prime Sales at Macquarie Capital. For Macquarie, actually, we provide the ETF redemption and creation services for the Bitcoin ETF, and we're in the process of launching the futures on ETF. Not only that, we also actually last month extended $300 million to a Bitcoin miner called Bitfarm to extend their Bitcoin and AI business. So we're actually doing quite a bit in Bitcoin. So today we're going to talk about the investment case for Bitcoin and also this emerging integration with traditional finance, TradFi. When the first time people called TradFi, I didn't know what it means. But according to a survey last year, that half of the traditional hedge funds already have exposure to digital assets. So it's actually the integration is speeding up. So we're joined by 4 speakers today, who are all senior leaders in crypto. Sorry, I'll go through. Start from the end. It's Bing. Bing Jian is a portfolio manager at Avenir Group. Avenir is very well known in Asia, in the crypto world. It's one of the largest family office and investment group in crypto. Bing previously was a macro trader and a prop trader before he entered started crypto trading in 2022. And then we have Elliot. So Elliot is the CEO of Aspen Digital, which is a private wealth management platform for family offices and ultra high net worths to allocate to digital assets. Before entering crypto, he worked in the fintech for traditional finance. And then we have Peter. Peter Chung is the head of research at Presto, a prop trading and financial services firm doing both traditional finance and also crypto assets. And Peter previously was also the head of BDA research in the first Korean cryptocurrency exchange. And prior to crypto, and he worked at various traditional finance firms as well. And last but not least, we are joined by Sebastian, who's the president of Coinbase Asset Management, a traveler from the US. And before entering crypto, he was global co-head of investment strategy for systematic active equity at BlackRock and also at Credit Suisse. So all 4 speakers had made their transition from traditional finance to crypto. I'll just actually have all of you to talk to maybe people not super familiar with your company and your company represents in the crypto world. I'll just let you all talk a little bit about the company and the strategies you guys are running.
Sure. I'll start with me. Yeah. Okay. Yeah. So I mean, Alpha talked about the transition. Like 3 years ago, I was sitting in the audience, listening to the crypto guys talking about the cryptos. But I was doing mining crypto back in 2017. So that's I'm not a stranger totally to crypto, but I made a switch because I realized that a lot of smart people around me are moving to this thing, crypto, and I said, maybe there's something. I think I'm not that young, but I'm young enough to make the switch. But for Avenir, I joined Avenir last year. Like Alpha said, this is Avenir is probably the largest crypto family office out of Asia, and we are. Last year when we started trading, we actually made a very big splash in the marketplace, especially in the option trading space. And here we have basically 2 main business lines. One is to manage the owner's personal capital, and we employ different strategies. And we also actually have an allocation program, Avenir Cubs program, where we allocated about $500 million to external managers in the form of SMA or the managed account format. And that can be in crypto and also can be in TradFi as well. So if you're interested, you're confident, please talk to Eric, who's sitting there. And
we have a lot of money, basically.
He has a lot of money. We so far we have allocated to like 30 different teams up to $70 million US. So but we have a long way to go there. On the other hand, we are because the owner himself actually came from crypto business background. He was one of the very successful business people running the crypto exchanges in the past. And we are redoing another crypto platform in our current capacity. And that takes a lot of our resources and also my bandwidth as well. So yeah, if you're interested in hearing that, like, we can talk afterwards.
Hi everyone, thanks Alpha for the invite. So as Alpha said, I'm the CEO of Aspen Digital. We're a private wealth management platform purely focusing on allocation into digital assets. We service predominantly family offices and ultra high net worth and also some wealth management channels. We provide a full suite of product, everything from helping people on and off ramp to trading, to custody, to staking, to structured products. But the primary focus for our business is really more on the fund allocation side. So we have fund-to-fund products predominantly on hedge fund side. We've also helped clients allocate to venture capital. We're regulated in Abu Dhabi. I'm based in Abu Dhabi, and we service globally. Just on the fund side and the allocation side, we've built one of the best databases in the market. So we've canvassed the entire landscape across around 700 managers. Now we've met with over 400, and so we use that data to obviously construct the product and help clients get an objective view on who they should be allocating to, what they should look at from a IDD perspective, ODD perspective, and really being that trusted partner for the buy side.
Yeah. Hi, my name is Peter Chung. I'm the head of research at Presto. Presto is the quantitative trading firm headquartered in Singapore. We were established in 2013 by ex-jump trader who wanted to, I guess, start his own company at a young age, and then initially in the traditional as a trading firm in the traditional finance assets. In 2017, decided to expand our universe to include crypto. And then since then, I think we've been doing more crypto trading than traditional finance assets. And then, so on top of our activities is primarily prop trading, but on top of that, we have some agency business providing market making service, OTC execution service, and also yield products. At the moment, primarily for the crypto native customers, but we plan to expand that coverage to include traditional financial companies as well. I myself joined about a year ago to set up a research team. We now have a team of 4 writing analysts. Before joining Presto, I was also running a research team at the Korean crypto exchange called Coinbase, which is the oldest crypto exchange in Korea. And before that, I was there for 5 years. And then before that, I was, as you mentioned, doing institutional equity sales at the various investment banks, and often getting involved in conferences like this and so forth.
All right. So Sebastian Bea, president of Coinbase Asset Management. I'll tell you a little bit about Coinbase, Coinbase Asset Management, and a little bit about myself. In terms of Coinbase, you probably all know, but just for the avoidance of doubt, there was some big news in the market this week. The S&P 500 is determined to add Coinbase to the S&P 500 as of May 19th. The stock was up yesterday. The day before, it was up on the order of 20-25%. So this is a big deal, not just for my company and the equity, but really it's a larger deal because now every index fund in the United States of America that's benchmarked to the S&P 500 will have crypto in it, right? And I think it's really incumbent upon all of us to recognize when something new is happening that's never happened before. It doesn't happen that often in markets. We like to think that it does, but it doesn't. But this is new, right? That we have a company that was being sued by the SEC, not being sued anymore, and now has been profitable, I think, for like at least the last 8 quarters, and is doing rather well. And that's being recognized in a way that will now have impact to every major investment plan for the most part, right? Most people have some S&P 500 in their benchmark somewhere, and then that means they'll have a little bit in time of Coinbase in their portfolio. So that's a big deal. Coinbase Asset Management came by virtue of an acquisition 2 years ago. I was at a predecessor firm called One River Digital, and we were acquired back in March of 2023, and that formed Coinbase Asset Management. We are a regulated investment manager both in the US as a registered investment advisor, as well as in Cayman. We have assets of about $500 million as of May 1. That's on the way up, which is great. And then my role as president, I run the business day to day, focus a lot on investment products. We've built a new product that's made some headlines more recently in the Bitcoin yield space. And really, really happy to be here. Thanks for the invitation and excited for this conversation.
Thank you. The first question is, last time I checked, Bitcoin is at 104. Maybe just talk about the recent rally and also what's your prediction in this cycle?
I think it's 103. So I'm following the market really closely. Yeah. So I think the last rally was probably released by this ease in the macro under backdrop. We know that China and US, they sit down and talk, and it seems that the deal is reached. And I think nobody really believed that the US can go unilaterally and give the whole world a big pressure in terms of tariff. So things will be resolved. So liquidity is there. The Fed is not moving, but I think market actually is under pricing the probability of early Fed cuts. I guess that's probably where the rally is coming from in terms of prediction. All the indicators, if you look at the technical analysis, I think the weekly charts are fantastic to support to support Bitcoin to go higher. And in terms of flow, we have the stablecoin issuance just hit a new high. The past 2 weeks, the ETF, the IB ETF, has massive inflow. So the flow is also supportive to Bitcoin rally. And in terms of regulation, of course, there's a sweeping changes in the U.S. regulation. The agencies are very busy in terms of coming up with new regulations or deregulations to help, to make crypto great again. And just to add another, maybe 2 anecdotes. Last time right now at this price level, 1 Bitcoin is actually roughly equals 1 kilogram of gold. This is coincidental. But last time when the Bitcoin crossed up this 1 kilo gold valuation, it has another leg up afterwards. That's one thing. The other thing is I was in Dubai last week together with Elliot, and we had a closed door meeting with some heavyweights players in the field, and we all made our own prediction for year-end prediction. And the range for Bitcoin price is from low end was like 125,000, the high end was 180. I was 145 to 145,257. That's my prediction.
From my side, just sort of taking a step back and thinking about the clients we serve, they don't necessarily, or we don't want them to, look on that shorter time horizon, right? We try and get them to look at 5 to 10 years out, and it's my firm belief that we'll be sort of 10, 15x and that kind of time horizon. The other thing to think about with Bitcoin is the supply side, right? So all you've really got to worry about is demand. And if you look at sort of since the ETF launch and the type of people that are starting to allocate and the type of firms, it is obviously adding to some pretty serious balance sheets. And in my part of the world, you've just had Mubadala come out and they've allocated into IBIT, the BlackRock ETF. So there is this sort of game theory that's starting to come through. You've got governments that are putting on their balance sheet. I guess Sebastian will talk about the US side. And so it is extremely bullish at the moment. And obviously this new administration in the US is very pro-crypto. To the end of the year, I said 12 months ago it would get to 200,000 by the end of 2025. So I'm going to stick to that one.
Yeah. So price actions this year has been really interesting. You may be familiar with the analogy of a Bitcoin as a digital asset, digital gold, and maybe people who are not very familiar with crypto that term may not really resonate too well. But I think the month of April really showed that Bitcoin can behave like a gold. What happened in April was, I mean, throughout this year, since the start of the year, has been a macro concerns, and all the risk assets been kind of consolidating, including Nasdaq and Max 7 and Bitcoin. And then came April 2nd, Liberation Day tariff announcements, and then hell broke loose, and then so assets start tanking. But funny thing happened about a week into that, and the gold and Bitcoin started to outperform other risk assets. So what happened there was that basically up until April 2nd, so Bitcoin has two faces in my view: risk-on asset and also digital gold. And usually, normal times, it behaves more like a risk-on asset because Bitcoin is, at the end of the day, it's a network whose value comes from user adoption and network effect, similar to internet companies, for instance. So that's how I think people were kind of perceiving it. But what happened on April 2nd was sudden realization that the US dollar denominated the global financial system is not going to be what it used to be. So people were looking for assets where they can, looking for de-dollarization trade. And that's why the gold rallied, and then also Bitcoin rallied. So it was one of those rare occasions where I think the digital gold side of a Bitcoin story really came to surface. And we've seen some of this like in the past, like during the Russian invasion of Ukraine in early 2022, or the Silicon Valley Bank collapse in March 2023. So in the past, we've seen some rare occasions like that where gold kind of outperforms other risk-on asset. And then we saw this in the month of April. So that's what happened. In terms of a long-term outlook, I think you have to have a long-term view, I think, on this asset, as Elliot mentioned. And I think for me, the good mental model to have is a comparison to other store of value. And gold is obviously a very good benchmark. Right now, gold market cap is $20 trillion. Bitcoin is about $2 trillion. So, if you use that as a benchmark, you can say that maybe there's a 10x potential from here on. But maybe some of you here are not that interested in long-term view. Maybe short-term view is more interesting. In which case, believe it or not, we actually have a 2025 price prediction. We published it in December last year when we published the 2025 crypto market outlook. And then in it, I have a prediction, 210,000 BTC by the end of this year. And I'm not just pulling that number out of thin air, actually based on some valuation framework that we use, which is based on something called the MVRV. MV stands for market value, RV stands for realized value. Without getting into the weeds of it, it's kind of similar to price to book ratio in equity valuation. So, I estimate realized value at the end of 2025 and then apply 3.5 times multiple based on historical range. And that's how I come up with my $210,000 target price.
I heard you have the most bullish prediction.
Well,
your company.
We don't have a 2025 number, but we do have a 10-year out number of 840,000, and that's available in a paper that we published on May 1st called "Capital Market Assumptions: The Case for Store of Value." The case for store of value actually speaks to both gold and Bitcoin. So arguably, I should have been in the prior session in this room. I'll get to that in a bit. In terms of the current market context, I think what's a little bit harder for those to see on the outside looking in is that we actually had a bear market in crypto before the equity market had its fall down. So just to remind folks, the last administration for specifically the SEC was not that helpful to crypto. It actually created a little bit of a bear market within the crypto market as we transitioned from the old administration to the current administration. Because the old administration basically said Bitcoin's okay, it's a commodity, but for everything else, the more utility it has, the more likely we're going to declare your token a security. So what does that do to the marketplace? It basically pushes people to Bitcoin and to meme coins, right? So that explained a lot of what you saw in the 2024 market, where you saw a lot of speculation in meme coins. Solana did very well, right? We make the transition to a Trump administration. What are they telling you? They really want to bring innovation on blockchain. They want to do it in the US. and they're not going to sue you if you're trying to do something really interesting on a blockchain, right? And they recognize that we need legislation and therefore more regulations to delineate between what's a security and commodity, et cetera, right? That has enabled a different market. But in terms of this drawdown that all related to Liberation Day, we were heading into that already having had a sell-off. So I think it's important to remember that. Also, and I think to Peter's point, but to put a finer point on it, there is a narrative that Bitcoin will become digital gold, but if you look over the last 2 years, it wasn't really doing that. April 4th is a big day for macro traders because that was the day on Friday when the S&P was down 5% and Bitcoin was up 1%. Big volume, right? Now, one day doesn't make a trade, but humans will tell new stories with a few data points, and this is something that did occur, and it has everyone's attention. So if you've looked over this cycle and you see what Nasdaq did, and then you look at the vol of Bitcoin, you would have said, well, Bitcoin should have been down massive, and it was actually outperforming, right? This is a big statement, and it's now feeding into expectations on a go-forward basis. Now, back to the long-term forecast. And the current environment, this current administration is telling you very clearly that we want to change the nature of trade, right? And now we're in a much happier place than when I was getting on the plane on Sunday night coming over here, which is good. But they are definitely saying that they would like to change how trade is happening between the U.S. and the rest of the world. And they're also telling you that they would like to have a weaker dollar. And it's going to happen, right? Now, if you're a big asset owner outside the United States of America, like you are listening and you are hearing this. And then this week, what did you see? Well, the new budget is going through the House of Ways and Means Committee. I'm sure I butchered that. But it's saying right now that we're going to add $3 trillion to the deficit. Not cut, add. So what do we have? Too much debt, probably not enough growth, and not enough fiscal restraint across developed economies all over the world, right? And now we're concerned that we're heading through this transformative monetary environment, and there's only one way out, because we're not going to have fiscal restraint. We're not going to hard default, so there's only inflation, right? And if that's indeed the case, then that explains a little bit of the gravitation towards gold, but it's also explaining the view of Bitcoin in the long term, which is we believe it's going to earn almost an equal footing with gold in about 10 years' time, which will take it similar to the numbers you discussed, where we're going from approximately 2 trillion to about 18 trillion in total market value for Bitcoin between now and the next 10 years. And that's just assuming that plans around the world, outside the US, are concerned about the dollar and saying, okay, there's a couple different ways that I can seek to store value in this environment. Is it going to be a straight line between here and 840K? Absolutely not. It's going to be very volatile, I'm sure. But our view is very constructive for the long-term case of Bitcoin, and we're seeing that reflected in a lot of, visible public announcements and activities, but also other activities that are not so public but are happening nonetheless.
Thank you. So we all got the long-term bulls argument, but there's also a lot of other investment strategies in crypto that delivers more risk, adjusted returns. Maybe for the knowledge of the audience, can we talk a little bit about different investment opportunities and strategies in crypto?
I think buy and hold strategy is always a very good strategy for crypto. It's just like I feel my daily job is to help the owner to keep his Bitcoin and generate yield on top of it. And majority of his wealth actually is in crypto. 90% of X billion dollars is in crypto, and we are employing some call overriding strategies to generate yield on top of it. So I think option trading, actually surprisingly, you'll find that actually option vol market in crypto is more liquid than most people could have expected. Deribit, like Coinbase just acquired Deribit as the largest crypto derivative trading place. That's a very big deal. So I think vol trading in crypto is something that you should look at. And then in crypto world, definitely we borrowed a lot of these strategies from the TradFi, such as the CTA, which is it worked. But not always working, not working as well as we could have believed. It's if you leave I think the daily CTA strategies are there room for improvements. And then if we go down the list, and then we have like those long-short cross-sectional strategies, but that is also suffering from the lack of liquidities for coins other than Bitcoin and ETH. Then of course there are all these discretionary traders who actually I think have a very decent value add-on to the trading community. I'm not sure if you know the case where a very smart guy who actually exploited the loopholes on one of the largest DEX called Hyperliquid, made a few trades there. Every time he took home $1 million for every trade. So I think across all spectrum, I think vol trading, CTA, buy and hold, cross-sectional. I think these all have their place in this, and you just need to make your choice.
Yeah, from our side, there's sort of 4 categories that we'll put various portfolio allocations into. One is being purely liquid, buying and holding Bitcoin and other coins. Then you've got your hedge fund space, and we allocate to a mixture of quant, market neutral, and what we call fundamental, which is guys looking for undervalued tokens outside of the main players, which is hugely volatile, but potentially very good upside. And then you've got the pure venture capital guys that invest in blockchain companies with no token exposure, but these will have sort of 10-year time horizons like traditional venture. And then there's just been this emerging middle ground where they're not a hedge fund, they're not a venture capital firm, and they call themselves liquid venture. So it'll be around sort of like a 3 to 7 year lockup or term. But they'll trade a mixture of secondary market tokens and then also invest in primary investments at seed and Series A or pre-seed. And so we look at all of those holistically to develop a portfolio for clients. We prefer to allocate clients into the hedge fund space. I think the issue last cycle was a lot of the traditional family offices and ultra net worth didn't really want the volatility of a hedge fund and mark to market every month. And so they were pushing themselves to go more into venture, which is why so much capital was raised in venture more broadly versus liquid. The reason we like the liquid side, and we talked to this a lot about clients, is obviously the asset class in general is very volatile. But a lot of these tokens or these tokens that are private, when they become public, they're still very immature companies. So there's still venture-like returns potentially available. And this is why that liquid venture element has emerged. And then so across all those pieces, we help construct portfolios based on liquidity requirements and return profile. Market neutral products can do very well. There's still a lot of fragmentation in the space across exchanges and products. So some of them in a good year will do 20 to 30% with no drawdown, and in a bad year they won't lose money. So you can use that as a weight to the portfolio to either increase Sharpe, reduce drawdown, or just optimize for return if you want. I think the last point I'll make is the concept of the beta in the market and the return of Bitcoin. And just if you look at last year where Bitcoin did roughly 130%, if you looked at all the directional managers that we really followed in that kind of fundamental long short space, the top decile of funds generally were about at that level. There was a couple of outliers that was sort of 200 to 300% in the year. So it's very hard to beat the beta in this market. And that's why buy and hold can be a very, very good strategy. And then there's other ways that you can optimize that, particularly on the Bitcoin side, where you can add in certain strategies to generate a little bit more return on that through options, through arbitrage, through lending. And so that's really where we're kind of focused at the moment, is getting people exposure to Bitcoin and helping them optimize that holding.
Yeah, from my perspective, I'm a huge fan of a buy and hold strategy. So if this topic is more for your own PA, then yeah, that's the one I think you should stick to. But buy and hold is harder than you think because Bitcoin is a very volatile asset, and there's a lot of FUD out there, a lot of the sort of fears and uncertainty and doubts that kind of turn you not become very good long-term holders. So I think what you need to do is just study the fundamentals and understand why this asset is special. From our strategy, the Presto's strategy perspective, because of my founders, our founders' background as a high-frequency trader, our strategy is, it's a quant-driven model. It's a statistical arbitrage. Also try to exploit some inefficiencies that exist in the crypto market, which is very, very nascent, and therefore there are a lot of inefficiencies there. So it's actually not something that can be easily replicated if you are just individual traders. A lot of our traders they're engineers. They are people who, very good programmers and coders, and these are primarily what constitute our trading team. And then, so that's we don't manage outside money, so it's primarily the partners' money, and so at the moment, not really kind of going out and pitching our strategy too publicly to the market at the moment.
That's good to hear.
With all these three gentlemen that haven't gone before me, there's not much left over. I'll just try to add. I'll try to add a couple things just that may be of interest. I'm just curious. Raise of hands. Anyone who's a systematic trader here? Quant. Zero? I don't believe. Okay. All right. Look. I think at a high level, there's this concept of fundamental breadth, right? Or sorry, effective breadth. We don't have a lot of effective breadth in this industry. If you look at this industry and just and blink at it, what you think you see is a massively inefficient market that must be ripe for alpha, and that is kind of true. The problem is the market construction is not what you think it is, right? Bitcoin, ETH, Solana, Ripple, and stablecoins are kind of like 90% of market cap and liquidity in this market, right? So the structure of the market is just really has a big impact on what you can do. Bing was mentioning trend following. This is a market that is actually quite interesting for trend following because we have assets that are, to some degree, untethered to some fundamental value, right? And so it is the type of asset that if it's going up, it might continue going up far beyond what you would feel comfortable being exposed to. That's like the definition of a trend following market, right? So trend following is very interesting here. I would also echo what Bing said a little bit around derivatives. There is liquidity, but also there is a huge amount of inefficiency in the derivative space. We in particular see that in event trading, that like the derivatives market is not properly pricing for events, at least at present. So there's a lot of things that make this market look super interesting from an alpha perspective on the way, from the outside looking in. But then when you get here, you also see, oh geez, some of these alpha opportunities are actually massive operating risk issues that would be maybe unacceptable at the firm at which you operate, right? So there's an interplay between inefficiency and operational risk that is, I think, unique to the industry. It's reflective of where the industry is in terms of its maturation. It's going to change. It's going to get better. And that path is going to be probably, we think, a profitable one for those that are involved, but it's not easy. I would just say, the market structure also is changing in this industry faster than anything I've ever seen. Bing mentioned that my parent bought Deribit. Deribit, if you don't know, is effectively the largest options market for offshore Bitcoin options, and it's dominant in terms of market outside the U.S. And inside the U.S., we basically had nothing up until recently. We launched ETFs, and then after that, BlackRock was the first with IBIT to launch ETFs for options for ETFs. Okay, who cares? Well, you should care because IBIT at one point had half the open interest of Deribit inside of a year, right? So go from no liquidity, nothing to do in the US, to all of a sudden, it's like half the size of Deribit inside of a year. That sort of history doesn't really exist in, like, let's say, the stocks, like the liquidity and volatility and correlation structure for like MSCI DM, right? You don't have all of a sudden massive market structure changes, and there's more coming. So I think one thing that's really interesting about the alpha opportunities and the strategies in the space is there's so much change coming to market structure that being involved helps you to kind of capture these new inefficiencies as they show up.
Thank you. Maybe stay with Sebastian. Like we've seen moving back a bit to traditional finance. Some of the audience here are, have probably invested in MicroStrategy, and just kind of a bunch of public listed companies coming in the US. Is there a bubble there? Like how do investors or people in cryptos think about it?
Sure. I would say this space is highly controversial. Jim Chanos now publicly has described his short. I think it's maybe on MicroStrategy. I think, look, there's a lot of emotion and a lot of noise around this space, but there's not a lot of clear communication. And there's a lot of confusion as to how in the world something that has, let's say, 1 Bitcoin is trading for the value of 2 Bitcoin, right? And so what I would say is come at this with a perspective of learning and not judging, because if you're coming in with a bias that this makes no sense, it's all crazy, you're going to miss some really important dynamics. I think a couple of them that make me think that this is not a bubble, right? And maybe there's something to it. It's not to say that we're not going to get overheated and this will be a problem, but there's some elements that are being missed by the broader kind of financial press and by Twitter, et cetera. Number one, look at the tax rates for Bitcoin as an individual investor versus the tax rates for equities in a variety of countries, particularly in Asia. They're not the same, right? It might be 50% or 20%. Well, that has implications if you're thinking about buying something and holding it and trading it, and that's completely lost in this conversation. Another one that I picked up on, and partly out of our institutional relationships in the US, I didn't fully appreciate the reality that, like in the case of MicroStrategy, they were issuing convertible bonds. Well, if you're an insurance company and, let's say you are a life company and you are concerned with inflation, right? Because you have a long tail liability. Well, in that world, and actually that was my 3 a.m. call, so that's why I'm a little rough today. In that world, you actually do care about Bitcoin because it might be an asset that might help you in some of your modeling. Now, what's the problem with Bitcoin? Well, that is going to be from a reg cap perspective, that's a fully paid for asset, right? Not great. But if it's a convert, different story, right? And so I think the arguments here, people show up at these Bitcoin treasury companies, these Bitcoin development companies with their attitudes and their biases before looking at the facts, right? Now, there's other issues, right? There's a lot of kind of meme coin-like behavior that's occurring in the space, right? And so there's noise on both sides, but I think right now it's important to recognize that there are still impediments to be invested in Bitcoin, whether you're a retail investor or an institutional investor, and those impediments are different depending on what jurisdiction you're in. And it may be the case that some of these companies are adding value that's underappreciated by markets. That doesn't necessarily mean that they should trade at 2 or 3 times their actual book, but I think that the truth is somewhere in between what the bulls are saying and the bears are saying. I don't think either are right.
Okay. We'll probably now open to the questions for the audience.
I would give you my mic, but we're short.
Thank you for the presentation. This is Abby from Jefferson Capital. I want to ask a question about stablecoin. As Sebastian said, it's going to attract $2 trillion U.S. Treasury demand. Then where the demand is coming from, as to invest in treasuries, people can invest in ETFs or mutual funds, and people may already have the accounts with banks or ETF issuers to do so. Then what make them to shift to stablecoin, as they need to figure out on-ramp, off-ramp, and they need to open an account with crypto exchanges? That's a lot of work for retail investors. Thank you.
Is it a question to me or who is it for?
To you.
Oh, okay. Okay. Stablecoins, great point. Listen, I think this is a really critical week. In the U.S., there's a bill. The stablecoin bill is called the Genius Act. the Stable Genius Act, stablecoins. I don't know who came up with that. It was somewhere between House and Senate, but we don't know if this Stablecoin Act, as written, is going to pass. There's a big question right now. Some people want more from the Stablecoin Act in the U.S. to enable interest-bearing stablecoin, right? But that, let's just assume we're not talking about that, right? Most estimates, bullish estimates that have come out more recently on stablecoin adoption are presuming non-interest-bearing stablecoin, okay? So you put $1 in, Circle, Tether, whatever, your dollar's $1, but all the interest accrues to the, so if they just buy T-bills, all that revenue accrues to the stablecoin issuer, right? So you as a user, why are you doing that? Very obvious, because this is money like it's supposed to be, meaning it moves, like data, right? Like cash, if you have a $100 bill, there is no interest on that dollar bill, but you have, bare ownership of it, and you can transfer it permissionlessly, as fast as you would like, right? Stablecoins do the same thing, right? But where's the adoption? Why is the adoption expected to explode, right? Well, candidly, it's because the payment systems, the payment rails around dollar are terrible, right? The idea that we have this concept of Fed now, but Fed now doesn't really exist. You have Fed wires, right? We can't send money like we can send data, and so assuming the Genius Bill with non-interest-bearing stablecoins passes, right? Then we're going to have a massive immediate upgrade to dollars in the United States of America, right? And it's not going. I think your point about on-ramping, off-ramping is a good one. That's going to be abstracted away, right? So what's going to happen is stablecoins are going to be plugged into every financial account. Assuming the Genius Bill passes with non-interest-bearing. This is going to be like added functionality that just shows up in our bank accounts, where all of a sudden it'll be really easy for me to send $10 to my friend because he paid for drinks or whatever, right? It's just going to be an embedded functionality. Like crypto is going to win in part, stablecoins in particular, because we're going to take the wallets away from people, like seed phrases away from people. They're not going to have to do that. That's going to be part of a Web 2 experience, and just all of a sudden money is just a better money in the US. It just moves a lot faster. I think there's actually a lot of consensus that stablecoins are going to win big, but I don't think people understand how big they could win and the implications. I think that's actually part of the fight in the US right now, because the banks are reasonably concerned that if stablecoins are too successful, this could be an issue for funding, right, for banks. And particularly if interest-bearing stablecoins were actually approved, which it seems like that's unlikely, but that would be a real issue for banks, because if you could own a digital bearer dollar that pays you 4%, that's fully reserved, why would you put your money in the bank, right? So I think none of us are bullish enough on the potential for stablecoin and how much it will be sucking in dollars from the system, assuming this bill passes. Now, there's a chance it doesn't pass. In that environment, I think it's going to be a very different picture.
Maybe I want to add one more thing. I think the part of the question was, where's the demand coming from, right? So, and I think there's that U.S. part of the equation, but there's also another important driver, which is demand coming from outside the U.S. And there's been some interesting studies done about the demand for stable coin coming from emerging markets in places like Nigeria or Indonesia, and a lot of those emerging markets where their own monetary system is very, very unstable. And therefore, the people there are looking for safer ways to store their wealth, savings. And oftentimes in these countries, it's not Bitcoin, it's not some other crypto assets, but it's a US dollar stablecoin. Because it's many of the cases, these countries, their access to the US dollar is limited and restricted by the banking system in their own country. But then stablecoin is a very interesting option for these people because it's highly accessible and it transacts on a permissionless blockchain. So I think this is where a lot of demand part of the demand comes from. And I think also that's something that explains, a big part of the stablecoin issuance is actually taking place on a blockchain network called Tron, which is, it's just launched by a Chinese entrepreneur called Justin Sun, also a controversial figure, but believe it or not, I mean, it's actually winning in one of the biggest applications of a blockchain technology. So, and then the Tron issued stablecoins have become very popular in these emerging market use cases. So, yeah, that's something that I think we should definitely also consider as well.
So the first stablecoin company will be getting listed soon, right? Circle. Yeah, that's one. Yeah. That's one for people to watch out. We'll take one more question.
Hi, my name is Talon. I'm Alpha's colleague. I'm from Macquarie. With the global tariff de-escalated, crypto or rallied, and it's almost a historical high. So I just want to ask, if we look at 1 or 2 years, what's the next catalyst for crypto? And shall we take profit and shift back part to the gold? So thank you.
I mean, yeah, you shouldn't sell your Bitcoin. I mean, we all like to joke to say that it's harder to keep your Bitcoin than keep your virginity. I mean, I think selling Bitcoin at this level is definitely a bad idea. Please don't do that. And in terms of next catalyst, I think there's right now a sweeping change in the U.S. regulations. That, I mean, there's a few things we can expect. One is that the direct custody to take Bitcoin as a collateral, put it on a bank's balance sheet, the bank can do borrowing and lending on top of that. That's a major breakthrough if we get that. The timeline, I guess, is within the next 3 to 6 months. So that's one thing. The stablecoin act is definitely another thing, and the third one is in the U.S. there's something called a Market Structure Act. That is to help the smaller coins to be classified quickly by the Fed, by the SEC, so that there's like 90 ETF applications right now at SEC, and it takes time for them to be approved because the amount of work involved. I think if that get passed, some of these ETFs might get quicker. Like for example, some index baskets ETFs might get approved quicker. That will help the smaller altcoins. To me, it's actually very sad to see the Bitcoin concentration going up. Like Bitcoin takes about 50% of market cap of all cryptos in early 2022, but now it's around slightly around 65%. These days, back down a little bit, but still very, very high. And this, for the past 3 years, this increase in the Bitcoin percentage is actually with the injection of the creation of all these about 100 billion of stablecoins and a lot of these new projects coin get listed. So still the Bitcoin concentration has been increasing. This, I think, to me, the spirit of crypto lies in all these projects. These are the things that people can actually use if they got adopted properly. But of course, the innovation was discouraged because, for example, one of the biggest decentralized app is called Uniswap. It's definitely a cash cow, makes a lot of money, like $600 million every year, but it's just hard for them to unlock the value and give it to the shareholders or the coin holders. Because if they do that, then they'll be recognized as a security, then the US law enforcement will go after them. But with all these US deregulation coming up, hopefully this kind of dislocate, will be able to remove all these difficulties solely from the bottom up. It will encourage more innovation in the space.
In the interest of time, we'll probably just each speaker have 2 minutes on what's most exciting for you or your business.
More exciting about? I think I just see Bitcoin at $1 million in peace.
Yeah, I remember when it was 10,000 and no one thought it would hit 100, right? And that wasn't that long ago. That's when we first started the business. From our personal perspective, we're heavily focused on the Middle East. I think the regulators there have done a very good job in looking at the asset class and working with participants to build it into a global crypto hub. I think the US has taken a lot of that sort of sunlight off the Middle East, but there's a huge amount of value to unlock there, and obviously there's good relationships building with this part of the world as well. And we just got our license in December. I've just moved there, and it's going to be very much the focus for the next year and a half.
Yeah, I mean, the thing that excites me the most is, what happened in the last year's election in the U.S., and now we have this very pro-crypto administration. And when you think about it, it's just the kind of thing that happened so far this year under the Trump administration is something that you could never imagine, let's say 6 months ago. The most influential country in the world announcing Bitcoin reserve and coming up with, appointing somebody in the White House to lead or supercharge the crypto industry. That's all it's going to have a ripple effect to the other rest of the world, given the game theory dynamics. And so I think that, that's the primary reason why we see many other countries also reacting and trying to do something constructive in the industry. So I think we're entering into a very interesting period. I think the narrative tends to be dominated by the short-term price actions, and maybe that's why there's some nervousness or kind of concerns in the market at the moment, because the year-to-date price performance has not been as exciting as people had hoped. But I think if you just focus on the industry-specific development, there's many reasons to be get very excited about. So I think you have to watch this space, and it's not too late to get involved full-time in this industry, in my view. So I guess pay more attention and follow us. Our research, by the way, a little bit about advertising for Presto. We publish research is free for all, so you can just come and visit our website. We don't have any walled garden or anything like that. So if you want to learn more about the industry, please come in and visit us.
I'll be brief. I'm really excited about two things: Bitcoin and how it's serving as a unique source of or opportunity to save, and the upgrade of finance. So we're already talking about it, but the big problem that needs solving is how do you maintain your purchasing power through this transformative monetary environment? That's a really nice way of saying we have too much debt, not enough growth, and no fiscal restraint, and we're terrified about what's going to happen. Bitcoin is solving a problem that it was built. It was built to be a currency, clearly, but it is built to be this digital gold. It is being used in that way, and we're on this process of maturation for Bitcoin. It's no longer controversial in many ways. It is a commodity. It's been defined, and now we're just in this adoption phase, and that's pretty exciting. And being part of Coinbase in that process is great. I think what really excites me after that is the upgrade of finance, which is starting first to Abby's question on fixing the money, right? We have to fix the money first. Once you fix the money with programmable money, right, stablecoin, then you're going to have wallets everywhere, right? Then we can talk about the tokenization of everything. And that's when Ethereum, in particular, maybe Solana, gets really interesting, right? But you kind of have to go in stages. Bitcoin, we have to adopt it. That's happening now. We've got to get some legislative clarity on stablecoins and everything else, which Bing was mentioning. That's FIT 21. That happens, then we basically go Bitcoin, stablecoin, tokenization of everything, and in that path, that's a whole new world that we're living in the middle of 26, where we can build portfolios in a completely different way, and that might actually happen, and it's pretty exciting to be part of it.
Thank you all for attending the session. Thanks for the speakers.